I want to thank you for coming to this webinar. So cars, buying a car, having a car, there are some good things and some bad things about car ownership. So what I put up here are some items, and you could jump in and say, no, you don't agree with me, or yes, you agree with me, or give me some more items. So some of the advantages that I thought of owning a car is freedom, meaning you could get in your car and go anywhere you want, whenever you want. So love that. It's convenient. You could get in your car again and just be able to go to the store, or go to a doctor visit, or go see family, instead of waiting for a bus and time in that bus. And then emergency, if you have any emergencies, you could be able to utilize your vehicle to handle the emergency, whether you have to go to the hospital, you have to go see a loved one, or it's just any small emergency, you are able to get there. And then time. Taking the car back and forth, let's say to the store, could be 10, 15 minutes, but in the bus, it could take 2 hours to the same store. So time is definitely a factor when you own a car. And then the disadvantages I have is cost. As we all know, cars cost money. So first you have the cost of the car itself, whether you are doing car payments or you paid out your car outright, you have a cost. And then maintenance. We have to maintain that car. We have to do oil changes and tires, and I don't know anything about cars, so I don't want to start talking about other parts, but you get my drift. And then safety. Sometimes people feel cars are safe, and other times maybe not so much. You have so many people out in the road that drives differently, I would say, or don't adhere to all of the rules. How about that? So safety could be an issue. And then death. We have to sometimes worry about someone breaking in and either stealing something that's in our car or stealing our car. So that's always a concern as well. What about you guys? Any other advantages or disadvantages of car ownership?
I wanted to ask a question. Um, Denise, this is Theodore
Hi,
McLean.
Theodore.
I'm saying McLean because we have another Theodore in the house.
Thank you,
Um,
Mr. McLean, for
Okay.
coming.
okay, what I was going to ask, it's not in reference to what you just said, but will we be able to get like literature today on everything you're talking about?
Um, so you talking about the PowerPoint that I'm going through right now?
Well, what I'm asking is, should I get a piece of paper and write down things, or will I be able to get this literature after the seminar is over?
I could send this PowerPoint to Linda once this webinar is over. So no, please don't write anything. I'd rather you listen and then just so that we can have a conversation.
All right, thank you.
You're welcome.
And I'll be able to print it out if you guys need it.
Park is a problem because of course, I have a car outside, but unfortunately, I can't drive it. And I had a car in D.C. I had a Lincoln, nice Lincoln. I had a gentleman driving me, and then he was stealing my car at night. So, you know what I'm saying? So that can be, and cars are expensive, and if you don't maintain your insurance, uh, 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 how would I say it, concurrently, or is it concurrent means, huh? No, you you got to keep the insurance up because if you allow the insurance to lapse and then you re-establish yourself with an insurance company, it costs you much more. So my insurance was costing me $200 a month, and I didn't know we had another Theodore in the house, man. What you know what Theodore means? Means God given.
That's
That's right.
awesome.
Okay, Theodore.
Thank you, Mr. Theodore. So yes, you mentioned car insurance, and car insurance is definitely
Okay, what's
it could be advantage or disadvantage. So we're going to talk about car insurance in this presentation as well.
you do talk about car insurance. Okay, so my car insurance, I'm paying a lot of money. I have a really good driving record, and I was just wondering. Now they said something about they could reduce my insurance if they put that mile wise on there, but that means putting a device in the car to track your miles.
Mhm.
So I didn't want that. I just feel that that's too much of an invasion of privacy. I mean, we've lost most of our privacy, and I just didn't feel that that was a good idea, and I didn't know what else was on that agenda as far as tracking the miles. So what I want to know is, and I've explained this to my insurance company, at the time that you register, you should be able to take your car to one of their offices. They should check the mileage. And then when it's time for the car insurance to be due again, they can base your mileage on what you should be paying instead of putting a device in your car. Do you have any feedback on that?
So I'm sorry, what's your name, ma'am?
Oh, my name is Marie. I'm sorry.
Marie?
Mhm.
Thank you, Marie. So Marie, I agree with you. I'm like you. I would not want anything like that in my car. I don't like anybody tracking my miles. And I think the other thing, at least from what I've seen on TV, is they not only track your miles, but they track how fast you go. So the speed. And supposedly you get additional discounts if your speed is under, let's say 40 miles per hour, whatever, they have. So again, I would not want anything like that on my car. So my advice, and that's what I was going to mention later on, is look at different car insurance companies. I mean, there are so many different car insurance companies, and I would just, when your car insurance is up, like if you pay every month or if you pay every 6 months, then when it's coming due, I would definitely start, looking at other insurance companies and seeing, just do apples to apples comparison. Whatever, so that means you need to have your policy in front of you. And then say, when you go call, ABC company and say, okay, on my current policy, I have 10,000 miles and, 10,000 for accident coverage. So then you can get the same type of coverage that you may need. The other thing is having someone look at your policy and seeing, or even talking to an agent, seeing if you really need everything that's on that policy. For instance, as a car gets older, there are some things that you can remove. So again, I'm not an insurance agent, so I'm definitely not giving you advice about cars. I just know what I have done for myself in the past. And so, but the biggest thing is shopping around for different car insurance companies, and asking people who have a car, who's your car insurance, and seeing, right there in the building, because car insurance is based on where you live in terms of the price.
Yeah. Yeah, Denise.
Yes, sir.
Denise, this is Theodore McLean again. Yeah, on that last note that you just made, I lived in area code 32801 before I moved here, and just moving here made my insurance go up $50. Just moving from 32801 to 32805. Now I thought that was like crazy, but I was wondering, is there anything that can be done about that? I mean, from what I understand, there's not, but I'm still asking you just in case.
So car insurance, and since when we get to that slide, I'm gonna skip over it because we're talking about it now. But these are great questions. So car insurance is definitely based on where you live. So as you said, Mr. Theodore, it's based on your zip code. So no, there's nothing you can do about that. But it's also based on your credit score, believe it or not. And it's based on your driving record. So those are two things you do have in your control. So in terms of your credit score, everyone should be checking their credit score and seeing what that is. And if it's low, try to get that higher, because car insurance companies here in the state of Florida do check your credit score, by the way. And then third, your driving record. So you can get your driving record and you can see if maybe you had an accident, 3 years ago. Maybe there's something that's on your driving record that should have been removed or is incorrect. It's just like your credit report. Your credit report could have incorrect information. Well, your driving record could have incorrect information as well. So getting that, looking at your driving record and seeing what's on there might help you lower that bill with your current insurance. So those are my ideas.
And then also- oh, I'm sorry.
No, go ahead, Miss Marie.
No,
Oh,
I was told also that they charge, like the area where you live at, if it's a high crime area or whatever, and they feel that could be vandalized or whatever. So that causes your insurance to go up as well. But my problem is that I've had different quotes from different people, and my big problem is knowing whether or not I know that the company that I have is very reputable, but I wanted, I'd like to know a little bit more. I guess you call the Better Business Bureau if you want to find out their credibility.
you can do that.
Would that be like the number one thing to do?
I will call the Better Business Bureau, but in my experience, the best people who will tell you the truth about any company is someone who uses their services. So for instance, if you're looking at, ABC Insurance, then if you talk to someone who already has ABC Insurance, you can definitely find out the truth about what's happening with them. So I would definitely, as I mentioned before, talk to your neighbors, talk to your friends, talk to your family members. What car insurance do you have and what's been your experience with that? So I, definitely talk to people about their experience with their car insurance and find out exactly, but looking at the Better Business Bureau, absolutely. That's a great idea. Also online, there's a lot of reviews about different places. It seems like, Linda, that there might be maybe a insurance agent that might be a good fit to come in and actually talk more about car insurance. Like I said, I'm only talking about it from a consumer point and from a financial point. I don't know the ins and outs of the actual policy and what should be on there. I'm going to move on, but this is a good conversation. Thank you so much. So the process of buying a car. So what I have is some tips on buying a car. Maybe you already bought a car and this might be helpful for the next time you buy a car, or even when you are looking to sell a car or to do anything with your car. I just want you to keep these tips in mind. So the first one is actually buying a new car. So anyone who's in the financial business will tell you, if they are telling you the truth, that financially it's never a good idea to buy a new car. And you're like, why? That's crazy. You should always buy a new car. No, because a new car depreciates. Does anyone know what that means?
The values.
Linda, I didn't hear you.
The values,
The value, what about the value?
it lowers.
Yes, yes. So remember, a car is not really considered an asset because it's an item that you own that goes down in value every day, every day. Even as soon as you drive off that car dealership lot, you got that new car, you got that smell, and you're like, oh my God, this is great. I got this new car. As soon as you drove off the lot, it has dropped in value. it could drop in value anywhere from $2,000 to $10,000, depending on the kind of car you have. So imagine if you drove off the car lot, you had an accident, 2 blocks away, and the insurance was going to pay for the accident. They would not give you what you just paid for, even though you only had the car for, a half an hour or so. So it's a item that's always going down in value. And then the other problem with buying a new car is that you could be upside down. And this is when you have, you owe more money than what the car is worth. So one example that I have is that, let's say you owe to the dealership $15,000 for the car. But if you sold it tomorrow, it's worth $12,000. That means you still owe the dealership $3,000 more. So that's what it means with upside down. And that happens a lot with new cars. Tip 2 is trading in your car. So let's say you have that car and you're like, oh, okay, I want to trade it in. And a lot of people go to the dealership. So if it's a Ford or if it's a Mazda or what have you, they go back to the dealership of whatever the car is and trade that in. But I want you to think about, what is the dealership in business for? They are there to make money. So can you really get the best deal at the dealership? And a lot of times that answer is no. So trading in that car might be something that you do outside of the dealership, meaning that there's a number of websites where you can go to. You can, listed on CarMax or Auto Trader. So there's other places where you can go that you can trade, you can sell the car, or you can sell it to a neighbor or family member or what have you. But the dealership is not always the best place to trade in that car, or to sell your car. And then before you do either one, trade it in or sell, make sure you know the value. And you can always go to the Kelley Blue Book website to determine the current value of that car and get it appraised, or you can go get your car appraised. But know how much, because if someone is trying to give you, let's say $5,000 for the car, but it's actually worth $8,000, how would you know that? So finding the value of that car is definitely important. Oh, sorry, I went the wrong way. Tip 3, financing.
Wait, somebody has a question.
Sure.
Would that be true of all transactions? Because I ran into a situation rather recently where I bought an iPhone. I had both of them in my lap. And the company, AT&T, wants me to trade in my phone, which is less than a year old, and they're gonna give me this phone. So I'm kind of suspicious about that. So of course I know you're not dealing with other transactions, but I guess that's true about everything.
It is true about everything. In terms of phones, a phone is, as you can imagine, not going to be as expensive as a car. But the phone business is so competitive now. So when they say they want you to trade in your old phone, because last year I traded in my old phone, make sure you're getting a good deal. Because with my trade-in, then with the new phone, I paid like $10 instead of, the whole $80 or whatever it was. So the bottom line with that trade-in with the phone is that the new deal is going to actually give you that a new, you getting a step up in phone. And a lot of times it's like, do we need a step up in phone? Why do we need this? Do we need to increase our bill? My phone, when I traded in, was 5 years old, and they was like, you don't trade in your phone. No, I keep my phone because I'm too cheap. But you know, a lot of times every year, people might trade in their phones. You just gotta make sure that you're getting a good deal for that trade in. If my phone works, I'm keeping it.
Uh,
Um, Linda, I couldn't hear.
He's just saying, how do you know it's a good deal? Because it's difficult for them to know the difference between items.
I wanted to say something, excuse me, I'm sorry.
Go ahead.
I wanted to say something about buying a car. I'm actually taking notes for a friend of mine that's buying a car, but I think probably the best way to do it is before you even go to a dealership is to do a little research on how much certain cars would cost and, you know, get information on it or whatever and how much payment should be or whatever. Because when the last car I bought, I went in and told them what I wanted to pay. I said, you know, I said, this is what I want to pay. This is what I want. I told them, it's like, because you're in charge, you're the one that's giving out your money and you should take charge of the whole situation. When you go in, you say, okay, this is what I want my down payment to be. This is what I'm looking for. I'm looking for a car with low miles. I'm looking for not a flood car because I had gotten one of those one time. And so I definitely said, and don't look up no flood cars for me, okay? So, but yeah, it's best to take charge of the situation instead of going in blind. You can do research on it before you even go and find out a little bit more about it.
Was that Miss Marie again?
Yes.
You are absolutely correct. I'm going to come back, Mr. Theodore, to your question, but Miss Marie, you are absolutely correct in terms of making sure that you are in charge. That's exactly what this is all about. This slide is talking about you being in charge of the entire purchase and not letting someone else tell you what you should do with your money. So I totally agree with you about that. And that's what this slide is saying. It's saying that you can definitely pay more at the dealership for that car. So please make sure that you're financing. My advice always is get financing outside of the dealership. I usually go to the bank, and whatever bank you're at or credit union that you already have an account at, and get my financing from them. And so therefore, once I go to the dealership, I'm in a better position to negotiate. I already have my financing. So whatever they saying to me about financing, either you going to beat what I already have or there's no discussion, really. So that means you are now in the driver's seat. If you already walking in and you already know what your payments are going to be, you already know what you're going to, what you are going, what the car, how much you're willing to pay. So if you already know that, then if they show you a car that's, 10,000 more and you go, no, that's not, I'm not doing that because I've already been approved for car A. Or for this amount, for this set amount. And then the other thing I want to mention here is the salespeople at the dealership usually ask you, how much do you want to pay? That is such a big question. How much do you want to pay? And if you tell them, let's say you say, I only want to pay $250. You know what happens? They will find you a car and a loan that you pay in $250. But it might not always be the best. It might not be the best deal that you can get, even though they found you something for $250. It might be that you are spending 20% on your interest or 25% on your interest rate. So just because you tell them what you want to spend, they're going to get there. They will definitely find you a car and a financing package. So again, when you are in the driver's seat, that's when you go into the dealership if that's where you want to get your car. And then Miss Marie said, you know, always look to know what kind of car. You should always do your due diligence on the car. And that means you should get a Carfax on the car before you purchase it to make sure. And a lot of dealerships are giving that to you now. But know what happened with the car. She was talking about like flood cars. If you got the Carfax, they will tell you that it was in a flood, you know, 2 years ago or 4 years ago. So again, knowing and doing your homework on a car is key. Mr. Theodore, I haven't forgotten about you on the phone. I just want to get through this and then I'll go back. Step 4 talks about the budget.
I have a question.
Yes.
Regarding what you were explaining us, if I want to buy a car, a wagon at Toyota, and I have my account in my bank is with partners, okay? I can, you know, finance and deal with them to buy the way that I want. That's what you just explained to us.
So let me make sure I heard you correctly because I
Perfect.
wasn't sure. So you said that should you your financial institution is partners?
Yeah,
Is that, so you're saying should you get your financing through partners to
Yeah.
get to buy a car?
and then I go to Toyota and I pick my car and I deal directly with them.
Yes,
That's what you, okay.
Yes.
perfect.
absolutely. Yes, you go to partners and you get the financing, you get approved for the car loan before you go to Toyota to get your car. Absolutely. Step 4 talks about that budget. So this is something else that Ms. Marie had talked about earlier, is making sure you can afford the car. So that means you have to do your numbers before and know how much it's going to cost before you set foot in the dealership and before you get a loan. So how much can you afford? You know, because you should know your budget. You should know what you have. And so I want you to sit down and determine what can you spend in monthly payments. And the ideal amount is no more than 15% of your monthly income. So the example I give is that if your monthly income is $2,500, then your car payments should be less than $375 a month. But I want you to remember that $375, which is 15%, has to account for other expenses when you have a car. One of them is car insurance. We talked a lot about that before. And there are maintenance costs with the car. There is every year you gotta get your title. You gotta get the vehicle sticker. So there are expenses. There's oil changes and tire changes, and you know, again, all of that needs to be part of that 375 that we just talked about. You don't want to get a car and then you can't afford your rent, or you can't afford your utilities, or you have to change how you pay your rent. That because your rent is important and the car is just an added. Remember, that's a want. And so you're adding that to what you already have existing.
Could I interrupt for a moment?
Yes.
Also, like when you're buying a car, a lot of people don't realize it, but you know, because they're so excited to get the car, they're not realizing once they step out of there, they have to deal with their insurance. And the insurance is going to, you know, probably go up because you're going to get a newer car. So the car insurance is going to be a little bit more. So you kind of got to figure that in with the other finances as well.
Ms. Marie, you are absolutely correct. And that's my next slide, as you guys can see. So I don't want you guys doing what this lady is doing here and screaming and yelling outside when something is happening with your car. So what I want you to do about car insurance is review the rates before you purchase a car. So if you're going to get a Mazda 2015 or Mazda 2020, then know what the insurance rate is for that particular car before you buy the car. So call around and start getting some car insurance rates so that you know how much it's going to cost. And you go, maybe a Mazda is not for me because it's too expensive. Let me look at a Nissan. Or maybe I need to look at a Chevrolet. You know, so you could decide on, you know, the kind of car you want based on the insurance. So make sure you calculate that insurance cost. And then we talked about the address. The address is definitely a factor. Mr. Theodore already told you guys that. And then your credit score. Your credit score is definitely a factor in determining your rate. And so again, the higher your credit score, the better off you are. And then the other thing I was going to talk about in terms of insurance is they sometimes have programs, insurance companies that will reduce your rate. So for instance, if you haven't had any accidents in the last year or 2 years, or if you only put on 5,000 miles a year, you know, so they have different programs. So call your insurance company and say, okay, is there any type of programs that I can qualify for that will help reduce my rate? So talk to them. I had mentioned before that, you know, do a comparison. I still think you should do a comparison with other companies, but you can always talk to your current insurance company and say, okay, how can I get this rate lower? Because it's really affecting, you know, my monthly budget, you know, this large amount that I'm paying you guys. So is there anything we can do to lower this amount? Is there any program you have? So again, that's something that you can do to talk to your insurance to see if there's other things, other factors, and then I talked about that driving record. Find your driving record and see what that is, and see if there's anything that needs to be removed or that's incorrect or what have you. So if you had a number of accidents recently, then that could definitely affect your rate. And then buy here, pay here. So when you go to those places, everyone is approved. It's a great place, right? You can get your car and they have tons of cars here, and they sell and finance the car all in the same place. So you don't have to go to the credit union or the bank. You can do everything there. However, these cars tend to be older and low value vehicles. They also tend to be a lot more expensive because of the interest rate. Because remember, everyone is approved. So they don't care about your credit. Matter of fact, most of the times they don't even check your credit. And that's usually not a good thing. But when everyone is approved, then that means that they have to make sure that they're the car that they're selling, they have to get their money up front. And a lot of times the way companies get their money up front is the interest rate. So they increase that interest rate. So again, that interest rate is probably over 20%. And then, and related to the banks or to a credit union, it might be about 5% or 6%. So it's a big, big difference. And then they, excuse me?
Sorry. Can
Go
I
ahead.
interrupt?
Absolutely.
Okay. So anyway, so when you're buying a car also, the warranty is very, very important, because sometimes people buy a car and before they even have it a week or two, something goes wrong with it. And if their warranty, they don't have a good warranty, now they're not only paying the payment for the car, and they're broke because they had to pay a big payment. Now they have the repairs to do, which causes financial problems. So it's good to, look ahead and, ask questions. And the best thing to do before you even leave your house, to write it down on paper and take it with you, because sometimes you have all these questions in your mind. But when you get there, your mind goes blank because you're so excited. You're like, oh. But if you write it down, it'll help you a lot. Always leave space to write in, an answer to what you're looking for. So that's what I wanted to say about that. It's very important for that warranty, to have a good warranty, because you can't pay for repairs and, your insurances and all that. So it's a big hardship if you don't look ahead.
I totally agree. Thank you. Thank you. I see you moving, Linda. Someone else?
Yes, my name is John. On the warranty thing, if you're buying a new car, I see a lot of people do this. If you're buying a new car, it's already under warranty. If you buy a second warranty, you got 2 warranties, and there's no need for that because they go concurrent. So it's best not to. There's another thing too. On the insurance, on insurance companies, they always give you an introductory rate. So after about 2 or 3 payments or segments, you can always shop around for a different insurance because they're going to give you an introductory rate, which is what I always do because they're going to go up. I have had the same insurance company with a different agent that I paid $400 less on 6 months, for 6 months. So it was the same agent, the same company, but a different agent. So shop around.
Thank you, sir. I appreciate that. Yes, yes. Shopping around is definitely good. And I think the information you provided about the warranty, yes, definitely remember that with a new car, things are going to be a little bit different. So thank you. And again, going back to the buy here, pay here, repossession. So buy here, pay here lenders may install a tracking device. So that's similar to what Ms. Marie was saying, but it's a little bit worse because what that device will do will stop your car from turning on or allow them to track your car. So they do that so that if people don't pay, they can go back and get their cars. And then the other thing with buy here, pay here places is because they are not checking your credit, they might not even be reporting your payments to the credit bureaus. So if you've been there with them for 2 years and not a single payment is being reported to the credit bureau, that's a problem because it's not helping your score any. So those are questions you want to ask. And I would ask that to a dealership as well, or to the bank or finance company, whatever you get. Are you reporting to all 3? By the way, there's 3 credit bureaus. Are you reporting to all 3 every single month? Because that's what you want. You want it to be reported so that can help your credit score, and your credit score increases, and that, remember, helps your car insurance rates. And then, and then APR. So APR is the annual percentage rate. And every car has this. And basically all of this is the interest. How much interest? And does this matter? Absolutely. Paying interest on a 20% rate, at a 20% interest rate versus a 10% interest rate could make your payments in half. Actually. So what do car dealerships do? They look at the years. So remember when we talked about I wanted my payments to be $250. So they said, oh yeah, we can make your payments $250. The interest rate is going to be 20%. But what we're going to do is now your payments are going to be for 6 years. If you want that $250, or it's going to be for 7 years. So the longer the time frame, the more money you're paying, even if it's your payments are low monthly, over the time frame you will have paid more. So you don't really want longer time frame. You don't want 6, 7 years. The shorter that time frame, the more expensive it might be, but the less interest you will be paying. So you want to negotiate, negotiate, negotiate all the time. And then, by the way, because of the pandemic and because of everything that's happening in the country, if you currently have a car and you are making payments, check out your interest rate. If your interest rate is 8% or higher at this point, you probably can refinance your car because the interest rates are going, depending on your credit score. Again, you need to check your credit score and your report, but interest rates for cars are going like 2, 3, 4% at this point. And that could definitely reduce your payments. So again, refinancing your car, especially if you had it, usually you want to have it over a year, and make sure you have payments in your credit report for that year, and they positive payments, meaning you paid on time and you paid what you need to pay. You know, if you're supposed to have paid $250 and you paid $100, that doesn't look good. So paying what you're supposed to pay, that $250, again, refinance, look into refinance. And again, go to your bank or credit union to do that. Going back to the leasing terms that I have here on this PowerPoint, please make sure the shorter the leasing term, the better off you are in terms of paying for your car. And at first, just like that gentleman said, initially, if you have to, he was talking about the insurance that every 2 or 3 months, you can change. But initially, if you get a longer time frame, let's say you got 7 years, then a year from now, go back and refinance for 3 years or 4 years. And then your credit score. I talked a lot about this, but every one of you should be checking your credit score, because higher score equals lower interest rate, and a higher score equals smaller car insurance payments. So yes, while you may not be doing anything in terms of credit, although you might not have credit cards or anything else, that car loan is positive. So if you're paying, again, like I mentioned, every month and you're paying timely, then that is helping your score. So again, you could go back to your insurance company and say, my score is now, this amount. It was, when I first started, it was lower, but now it has risen. Can we, relook at different policies and see what we can do to lower my payments? So a credit score is really important, and it really makes a difference when you're trying to purchase a car. So questions. So I'm gonna go back to Mr. Theodore's question. He talked about knowing a good deal when we talk about phones. So what I usually do is just say, okay, what if my phone is paid for? So there's a couple of different things, Mr. Theodore. If your current phone is paid for, okay, then what you're going to do is you're going to trade in, let's say, to a newer phone. So then the newer phone, let's say your current bill is $50, and then that new, once you trade in the phone and your new bill is $100, that's way too expensive. It wouldn't be a good deal for me. But that might be $100 if your current phone is not paid for. If you're still paying on it with, I think you said AT&T, and now you're going to Verizon, let's say, then they're gonna take those payments. So let's say you're paying, I don't know, $50, and they move it over, and you're still paying $50. Then you're still paying the same amount, but you're getting a new phone. So that might be a better deal. But again, you gotta look at what you're getting for that new phone. Besides it being new, it has a better camera or something like that. We talking about finances. So what is it helping me do with my finances? Is the bill going to be less expensive? And then they could do the same thing with the phones. So, you know, let's say that new phone, your current phone is paid for, and then the new phone, they say, okay, it's going to be $10, but that's going to be for the next 5 years. You don't want to be in any contract for 5 years, because in 5 years, that phone is obsolete anyway. So again, you know, they could stretch it out just like the financing companies do. So just looking at everything that you're doing, and phone companies, by the way, look at your credit score as well when you are negotiating your terms, and what you're going to be paying in terms of your phones. So just looking at all of the numbers basically will help you decide if this is a good deal or not. I hope that answers your question.
Wait.
The actual bill, because first he told me it'd be $58 a month. Then later on, he came back and said the first and second month would be a little more than $58. So during those months, I guess I'm paying for the phone. In addition to that, he wants me to turn in my phone, which is maybe 4 or 5 months old. I think I paid about $500 for this phone. So I think they kind of get me. You know, then he said, well, it's a G11. And I really don't know what a G11, what that means altogether. So I think they're you know, they're getting to me. You know,
So in terms of the phones and that, you know what we can do, Mr. Theodore, and Linda has my number, and you probably have it as well, because I gave most of you my card, but we can talk offline and we could talk about, you know, if it truly is a good deal.
I have a suggestion or question. How
Mhm.
would you suggest that like they go to their financial institute and request for a loan for a car? Like what paperwork and what steps do they need to know before they get there?
Okay, good question. Thank you. So you could start by looking online. So if you have access to a computer, or if you have access to the phone. If you don't, just call them. Call up your bank or your financial institution, say, what are your current rates? So that's what I would start with, is the rate. So what is your current rates for financing a car? So I recently looked at this, so that's why I know they have different rates for different terms. So for instance, if you want to finance your car for 24 months, or if you want 48 months, or if you want 60 months. So they have different interest rates. So you have to figure out how long you want to finance the car, and then they'll give you a range. So let's just go with, I want it for 24 months. So that's 2 years. And that range is 2% to 3%. So then what I did is I asked them, okay, I'm a current customer. This is my information. I don't want you to pull my credit report. I just want you based on the numbers I'm giving you. So my car is, let's say it was $5,000. And my credit score is this, and my current monthly payment is this. So just from this information, can you tell me what what, based on just what I'm giving you, what my payments would be, what my interest rate would be? And so then if you're happy with what they're saying, then you could say, okay, then I go ahead and let's put in the paper. So what they did is they'll send you the, because I did it all on the phone, so they email me the application. But if you go inside the bank or the credit union, then you can fill it out there, and then you can start the process. But once you start that process, that's when they pull your credit report. And remember, your credit report gets a hit meaning that it decreases your score when someone looks at it. So that's why you want to do your upfront research without them actually looking at your score. But the information they give you, because they don't look at your score, is just a range. It's just approximate. They can't give you a specific interest rate until they actually pull your score. And then they're going to ask you, for your income and, documents that you have to submit to make sure that you can pay your, pay the car payment every month. Any other questions or comments?
Yes, about, I'm gonna say about 5 years ago, myself and a friend of mine got the same kind of car. I got my financing through my bank. He got his financing through the car dealership. He had more on his interest rates than I had, and he wanted to know why. Because we had they went through the same bank. They didn't go through their factory financial at that time. We went through the same bank, but we had different rates. I found out that because the car lot got the interest rate, they tacked on the 5% because they got the interest rate for them, even though it was the same institution. So it's always best, like you say, to go to your institution yourself. With the car, find out what the base price is, and you can find that out online. I always do that. And then any extras that you want, that's where find out where the car is going to be more. So your bank will tell you what the base price is on it and what they will finance on it, or what they should finance on that particular car.
Thank you, sir. You are absolutely right. And that's something I did not mention, but you are correct, is that another reason why you don't want to finance your car through the car dealership is because, again, the car dealership is in the business to make money. There's nothing wrong with that. I mean, that's the business. They in there to make money. So whatever the rate is that you're getting from whatever financial institution the car dealership is going through, they can put on an additional amount so that they can make money on top of that. So if the bank says your rate is 3%, the car dealership could put 2% on top of that, and really now your rate is 5%. So you're paying the car dealership. So they are definitely making money. So that's why it's always a good idea to, and again, shop around, because then you could, once you have that rate from your bank or your credit union, the car dealership says, you know what, I might can meet it or beat it. You don't even want them to meet it. You want them to beat that rate. Okay, if you can beat that rate, hey, that's fine with me. And remember, if they could beat the rate plus the terms are the same. You don't want them to beat the rate and then you're still, they go down to 2%, but now you got to pay for another year. That doesn't help. Remember, the longer you pay, the more you pay, the longer the time frame. So that is a great point, sir. Thank you for bringing that up. The car dealership is always in there to make money. And like I said, that's nothing bad against them. It just is a fact.
I have a question. Now, do you recommend, like, let's say somebody gets their financial institute to provide them with a loan. Do you suggest that when they go to the dealership, they immediately say that, or they kind of withhold that information until they have given them? Because, when you go and say, I'm going to pay cash, they kind of charge you more. So would you withhold that information until they have all the numbers that you want, that you're looking for, to let them know?
Yes, I would. If it was me and if that's what I was going to do, then yes, I would definitely withhold that information until I have everything in front of me and we're ready to do the deal. Then I'll go, okay, I already have my bank and this is my pre-approval letter. Because you want to get something from the bank or the credit union that says you approve for whatever amount that is. So yes, I wouldn't go in there because they, remember, again, car dealership is there to make money. So they will definitely do things differently when they know you're not getting your car. And I'm not saying they're crooks or anything like that, but you're not getting your financing through them. So I would definitely hold on. Yes.
I'd like to say something else. Also, when buying a car, you have to think about, you know, what kind of car it is and where the parts are going to come from. And some of the cars, the parts are very, very expensive. So that's another thing to think about, you know, when buying a car, because you have all the other expenses, you know, maybe with your insurance going up and your payments and all that stuff. So I think that's very important as well.
Absolutely. I totally agree. Totally agree. Any other questions or comments?